The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 8th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. The first empowering belief, brought to us by Alvin McCauley, and it goes like this. We sometimes speak of a winning reputation as though we're the final goal. The truth is contrary to this. Reputation is a reward, and it is only the beginning of the reward, not the end of the endeavor. Reputation should not be the signal for a letdown, but rather a reminder of the standards which actually helped us to win recognition, those standards which can never be lowered. From him who gives much, much is forever after expected. How about that, folks? Our second thought of the day comes from Alden Palmer, and it goes like this. We are not put here on earth to fool around. There is work to be done. There are responsibilities to be met. Humanity needs the abilities of every man and woman. Let's go check out the abilities of the markets out here. Right now, we've got the Dow trading off about 14 points, out at 15,043 out there. S&P up a half a point, a flat market in the S&P, trading at 1626. Composite up 5 points, trading at 34.01. The Russell 2000 down 96 cents, trading at 966. We got Google to the upside, up $6 and change. Apple up $3.84, trading at 462 out here. Leading the charge, the upside dollar-wise, DaVita Healthcare up almost $9. That's up 7.5% out here. Whole Foods Markets up 9%, up 860. You've got ICU Med, ICUI is a ticker symbol, up 12.5%, up 774. You've got McKesson Corp up 6%. Big mover here, dollar and percentage-wise, Pioneer Southwest, PSE is the ticker symbol, up 20% here this morning. Let me see, what is behind this move out here? What did they announce? What did they announce out here? Publicly held. Offers to buy public held units of Pioneer. Oh, okay, so that's a buyout out there, so that makes all the sense in the world. WebMD, WBMD, the ticker symbol, they're up 16.5% this morning. Onyx Pharmaceuticals, ONXX, up 4%, now up $3.70. Equinix, EQUIX, up $3. Netflix up 3 as well. To the downside, Axial Corp down $5 and change. That's off 9.5%. Zillow Inc. Z is the ticker symbol, down 8%, off about $5. Jazz Pharmaceuticals off 8%, off 460. Fusion IO confused this morning, down 25%, off 450. Value Click off $4 and change. AOL off $4. CH Robinson, I'm sure they were out with revenues. They are trading to the downside. CHRW, let me see what their revenues were like, because the transports have been strong, and they reported revenues of $455 versus $414 million, and net income $103 versus $106, but they're taking a little bit of a bath here this morning. Our call number is 877-927-6648. Let's start taking a look at the indexes here, as we do at the beginning of the Money Master Show. Right now we're taking a look at the S&P 500. If you are listening in on the radio or your mobile device at tfnn.mobi, always remember this show will stream live to that smartphone device. But if you go to the homepage of TFNN.com, if you click on that button on the right-hand side with the 3 smartphones, the show will stream live, and it's archived on Channel 10. If you want to see this show in HD, go to the homepage of TFNN.com, sign up for the Tiger's Den. You'll see all these charts clear as can be. Right now, we're taking a look at the S&P 500. It's trading at 1627.11 right now, so another new all-time high out here. Where is this headed to? Well, most likely headed to, I would have to say, the 1650 level. At 1650, and I think it can do it here by the end of this week. Or the beginning of next week. What you get up there, you get the top of the next primary trading range. This is operating in 100-point swings out here, so it's up above that 1550 level. 1650 would be the next on the horizon. Right around 1650 or so would also get you right into this rising price channel that it is trading into. Not really much in the way of the A to B equals CD. I suppose if you're going to draw an A to B, we could draw a number of them, but I would say if I was going to draw an A to B equals CD out here, we'd come off of the lows back here February 26th, all the way up to the highs on April the 11th, and all the way back down. Let's see what that number comes out to be, 1646. So there's your A to B equals CD that the S&P 500 appears to be traveling in. So now we've got, in essence, really, it looks like about 3 patterns that would complete right about the same area. So it's up another 25 points or so in the marketplace. Once you get up there, that is an area where you most certainly will want to be cautious. If we go take a look at the SPYs out here, SPY right now, that is trading out at 162.83. In essence, that would be making the same type of a move. If we come off of the February 25th low, we'd use that as our A point, our B point. We'd use the April 11th high, that price level 159.71. Pull back down into the downdraft from April the 18th. The 1-to-1 A to B equals CD will take into about the 165.07-ish range out there. Right around 165.07, you will get right into the rising price channel of the SPY out there. That's what we've got going on there. Let's go take a look at the Qs here, because the Qs, I think, are going to be critical to what really takes place in the market out here. The Qs right now, we know they've got a butterfly pattern that's setting up here. Of course, they've got really 2 butterfly patterns setting up. The first one is the 1.272 butterfly. 73.09 is the magic number. It's really not the magic number. It's around 73.09. So even though I give you a number here, it's really just a target area. Right now, the Qs are trading at 72.58. What are the problems in the Qs? Well, problems volume. 19 million shares on Monday. Yesterday, 25 million shares. Remember, this is still a tiger butterfly out here because you're dealing with that X marks the spot, September 19th, 2012. That high 70.58. That volume 36 million. So long as the Qs do not get above 36 million shares on this move up to 73.09, or could actually extend into a 1.618 butterfly. If the 1.272 doesn't stop it, the area where it's likely to travel to is about 76.31 out here. But with the lack of volume, it looks to me like the 73.10-ish area might be it. But you're going to want to make sure there's synergy in the markets. That means correlating patterns that are going on. Those correlating patterns will be the completion of the move in the S&P, along with the completion of the SPY, along with the completion here in the Qs. Does it have to work out that way? Of course not. But it would be nice to have those correlations in place. So right now, you've got, again, 73.10. Now, it's very important to be paying attention to, and I don't spend too much time on this show. I do it during the 9 to 10 o'clock hour, because between 9 and 9:30, it's really all about what are the futures markets doing, and maybe what's going on in the pre-market with some of the other equities out here. But here's the key, and I mentioned this during the opening show here, and it's really going to come from the NASDAQ futures, where we're going to get some type of indication as to what the market is likely to do today. And the reason is, I'll go ahead and I'll put this on. Put these 4 little quadrants together. We were taking a look at yesterday morning consolidation patterns in all 4 30-minute ETF charts out there. Not ETF, all 4 30-minute futures contracts. And the key there, consolidation patterns, those are truly your friend. You want to see consolidation patterns. They help you to identify likely where when the next break takes place, whether it's to the upside or the downside, what your move is going to be, because you're going to do a move basically equal to or greater than the actual consolidation that it came from. And what you can see, maybe you can't see it clearly here. Let me just shrink this in. Yesterday, the only 30-minute chart that did not break the consolidation was the NASDAQ futures. The Russell 2000 did, the S&P did, the Dow did. The Dow didn't fulfill its 72-point move. That would take it to 15,025. Right now, the high has been 15,007. That says, okay, you got another 20 points left inside the Dow to move. But I say those other markets can move higher because you've got a 17-point possible move here in the NASDAQ futures. That says NASDAQ futures could move up to 29.71. You're at 29.57 here right now. That's another... what is that? Another 17 points. How about that? Right around 17 points. What the NASDAQ futures need to do, and they have not done it yet, it has broken slightly above the consolidation area, but what it's also doing here, it's taking on this little downdraft session that came in at 10:30. So there was a seller out here, big sellers, at 10:30 as we had 35,000 contracts to the downside. That's a 30-minute chart that we're looking at versus right now was up during that first session here from 9:30 to 10 with only 24,000 contracts. So you're moving up with light volume. You're moving up into the top of the bought area, and you have not really cleared this with conviction yet. When I say this, I'm referring to 29.5675. If we do clear this area, light volume or not out there, you've got another 17 points in the making out here inside the NASDAQ futures, and that will lift the tide of all of the other indexes out there, the S&P, the Russell, the whole kit and caboodle out there. So that's what's going on inside the markets. If we go take a look at the actual index itself, let's go take a look at the NDX 100. The NDX 100, we are going to see that same 1.272 butterfly. That 1.272 butterfly is scheduled to complete right around the 29.85 level. You're trading at 29.62 right now. So how about that? When you take a look at the NDX 100, you're trading at 29.62. To get to 29.84, you need about 17 points. And where that's going to come from, where that signal will come from that 30-minute chart inside the NQ out there. So you may not trade the futures. That's not the important point. If you want to be able to piece together what the markets are doing and why, make sure you've got access to that. Pay for the data feed or go find that feed out there. Go look at those patterns. They will help you to be able to stitch the market together as to what it is doing and the reasons why it is doing it. Let's go take a look at some of the other things here moving in the market. We didn't take a look at any of the currencies out here. Right now, let's go peek in on the euro. Let's go look in on the euro. And I said I didn't look at it during the first hour here. Didn't get to any of the currencies or commodities. So let's do some of that run here right now. We've got the euro. The euro moving into a overbought condition here, but it continues to pound its way higher out here. It had some real reasons here to actually back off, and it did not do that coming into the session here at 6:30 this morning. It created a nice little shooting star candle. It created a little bearish engulfing candle out there, and just simply, it was also in the oversold territory, had another divergent pattern, and it just said, nope, as the queen, it wants higher price. Now, right now, what do we have? We've got a little bearish engulfing candle up at these highs, so this is a 30-minute chart we're looking at. If we take a look at quick A to B equals CD patterns out here, let's take a look and let's see what has completed inside the queen. Right now, it's completed at 1 to 1.272. A to B equals CD up. Let's take a look at a quick retracement, because maybe what we've got here is really a Gartley sell pattern. Looks like we do a 0.618 Gartley sell inside the queen. 877-927-6648. Be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 11 points right now. S&P up a point. Composite up 6. Small caps down 1.6 out here. And, you know, folks, a couple times a year here at TFNN, we do a Tiger Dollar promotion. Now, if you use any services here at TFNN, now is the time to load up. And if you're sitting on the fence wondering, you know, should I try this out? Should I not try this out? Well, now is the time to get off that fence, take advantage of it. We've got a 20% bonus for any purchase of $500 or more. How about that? I'm going to learn to speak as well. $500 or more, plus up to an additional 10% will be donated to the One Fund. So if you buy Tiger Dollars between $500 and $1,000, it's 5%. Anything over $1,000, it's a 10% additional donation that's going to go out to the One Fund out there. So go to the homepage of TFNN.com. The software will not last very long. All the details are out there. Just take advantage of it today. Now, speaking of today, we've got the Art of the Charts. Great piece of software. I mean, great, fantastic. Did I say great? I mean, excellent, extraordinary, outstanding piece of software. The Art of the Charts, a 1-hour workshop this evening from 6:30 to 7:30. That is going to be hosted by Tom O'Brien and David White out there. So you want to make sure that you attend that workshop. Also, you get Tiger Dollars. Go buy Tiger Dollars. You can use it for the software. It's $59 a month, $520 for the year if you'd like to save an additional 35% out there. Let's go, speaking of Tiger Dollars and currency, let's go take a look at the U.S. dollar, Japanese yen. This thing just doesn't really want to give up. We still got that 3 drive to a top pattern out here, but it's just really been consolidating sideways here. We know what happens when you see long-term consolidation moves. They typically resolve themselves in the direction that they come from. This case here, the U.S. dollar, Japanese yen has been consolidating for a solid month here, really since April the 5th out here. And that level now, I would say the low of the consolidation right around the 96.35 range and 99.85. So that would be a healthy move out here. Candle-wise, nothing of real significance out here that is giving you any indication other than this 3 drive to a top pattern as to what the Japanese yen wants to do. Now, we can see coming off of the lows here, we have not had a consolidation period inside the yen for any period of time out here like this. The only consolidation would have been this shorter-term one back in November of 2012. But ever since that time frame, ever since that concert, 12 out there, the U.S. dollar, Japanese yen has been on a tear to the upside. So now just a high-level consolidation going on inside that currency pair. If we go take a look at gold here, right now we've got gold trading out at 1466. So it's up a little bit. Just an inside day. If we take a look at yesterday, this red line here. Now, what gold has done, as you know, it's made that 0.618 retracement off of that little waterfall cascade coming down off of the April 10th high of around 1590 down to the low that was put in at 1321 back on April the 16th. It's done that 0.618 retracement. That's 1487. It got up to 1487. Did that on May the 3rd. Still traveling with inside this wide-ranging body out here from April the 15th. You get a close above, I'd have to say, the 1481 level, and then you'll see gold move back up and test 1535. 1535 is the consolidation that it broke through. What normally happens in any type of consolidation move is you break out, you come back and you test it. If you get back inside, you'll go back to the bottom of the consolidation. If you reject it, then you will go for lower price out here. And so in that case, I do expect that what we'll see, just simply the behavior pattern out here in gold, looks like it wants to get up and maybe test that 1535 level. It's got to break above this candle. To me, it still does not look bullish out here. But if you were a short-term trader, I would think your outcome, your expectation would be at least a 10 to that 1535-ish level. It's trading at 1466 right now. Silver, on the other hand, silver weaker than gold. Silver has been struggling, quite frankly, to get outside of the top of the candle from April 16th. It has done it for a couple of trading sessions, but right now trading below it. That high is 23.97. It's trading at 23.87 right now. So silver giving all the indications, it's consolidating sideways. So what's that say about consolidation moves? Well, what it says is that silver actually wants to get down to about the $17 range. It broke its consolidation, which was a $9 range. You get down below $26, which it's done. Just take a 9 from 26, and that'll give you $17. So that is the target on silver. Light sweet crude, on the other hand, they want to charge us more at the pumps. Light sweet crude has a confirmed A to B equals CD up. That would take it to $98.91, maybe even $100. I don't want to see that. You don't want to see it. But the stock charts are saying that's what we're likely to see. 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So let's start taking a look at some of these stocks here, popping and dropping. One of them is Jazz Pharmaceuticals. Jazz Pharmaceuticals gapping down here this morning. It's down 9%. And let's go check in on why, because this actually has been on an internal watch list of mine for a while. I'd like to see a little bit more of a pullback here. Maybe today is the beginning of one, finally, as we take a look at this stock chart. First, let me go ahead and JAZZ, by the way, is the ticker symbol now, kind of akin to me. I grew up in Detroit, and my favorite radio station was WJZZ, and so much so I love jazz. And I used to have a license plate that said Jazzy One. So I think jazz is just simply, it's in my blood, and at some point in time I need to own JAZZ. So I was looking at where's the best place to take ownership inside this equity. If we take a look at the weekly chart of JAZZ says, well, the best place to take a position in this is as it were to come back to a breakout area. And this had a nice breakout area. It was right here the week of September the 21st. Big volume, 11.2 million shares to the upside. Right now, we're trading back inside that bar, so that is a nice thing. If we take a look at the candles that we have inside, Jazz Pharmaceuticals, well, what are we going to see out here? We're going to see one of yours and my favorite candle patterns. We're going to see one of our hammer candles. Right now, it's trading inside that. That is a beautiful thing. That hammer candle came in on April the 19th. We know the bulls want to defend this price point position of about $50.76. Why? Well, they've done it on a couple of occasions. They did it right back here when they created this three-candle. This is a weekly chart we're looking at. Three-candle Morningstar pattern. So if we want to take a look at where this thing broke out from, well, it's pretty simple. You can just simply go ahead and put some horizontal lines on the screen. I'll go ahead and put a red one as well as a black one. And then we're going to simply just try to read the message of the markets with regard to where is it that the bulls want to defend their position inside Jazz Pharmaceuticals. Well, ideally, the breakout would be that September 14th area, with this coming back into about 43.38 and less than 4.7 million shares. However, it breaks out on September 21st. The first time back was that it came back into that area. Now, the low there on the week of September 21st, that low is 48.01. Never gets down there and tests it. Gets down to a low here on the week of December 14th, gets down to 48.71. Does that with 2.9 million shares. That is where you see the first time you see the bullish candle pattern after seeing that large move higher with volume out here. So it says the bulls are defending the low of 48.71 out here. And the hammer candle showed us another area of where the bulls are really trying to defend their position inside Jazz Pharmaceuticals. So what this looks like to me, if we take a look at volume so far, now this is just through yesterday, really 1 million shares coming into a hammer of 4.6. Your ideal buy right now would be a test of that 50.76 number. We're going to go over and take a look at the daily chart, see what we can find at about 50.76 out here. But if you take a look at this equity, nice little rocket ship out here. And at this stage, no institutional selling or anything, just simply some accumulation that is going on. So this looks to be like a strong equity out here. At least it does at the moment. Institutional sellers walk in, well, that changes the whole picture. And Steve-O will have to take the jazzy one off of his hit list out here. Now, if we go take a look at that daily chart, remember 50.76 was the number. Well, take a look at that daily breakout. The low there is 48.01. The high is 56.25. So it's not going to be, doesn't look like it will come all the way back down there. That would be nice. 48.01 would be a place to go ahead and enter this trade out here. You saw the hammer candle on the daily. You got nice bullish engulfing that is trading into right now on the daily from April 17th. If we look at volume from that April 16th swing point, 1.3 million shares, but you've gapped down today with 1.3 million shares. That says, okay, this thing is going to at least come back and test 50.76. 50.76 was what we were looking at on the weekly. We know that the hammer is there. So what it is that we want to see, what it is, what it be. How about that? We're taking a look at April the 16th, that low, 50.76. We want to see a test of that level. Maybe 50.75, 50.74, something below, a close back above 50.76. Do it with less than 1.3 million shares. If it does it with more, that says, all right, now we got to get our patience cap on, and we got to wait to see what happens when it comes back and it tests the September 17th breakout around that 48.01. So Jazzy 1, the Jazz Pharmaceuticals, one that I think it should. Now, this does have some volume off of the high, no question about it, but you always have to be taking a look at things with regard to what is it going into. And what this is going into, it's going into a nice high-volume breakout session with 4.2 million shares. So we'll pay attention. We'll take a look at this one here tomorrow. Maybe we'll just keep this on our TFNN watch list, and we'll all do this one together out here because it does look like a strong equity, and it's a matter of trying to find the right place to enter inside JAZZ. If we go take a look here at the 30-minute chart of the NQ, because that is where we're. So the NQ now is officially breaking out. So if you were an intraday trader, what you would do is you'd go take a long position in something like, I don't know, what is it, the TQQQ, that's a triple out there, or some other move, because you got a 17-point move inside the NASDAQ futures. Now, ideally, you trade the contract itself out there, because that way, this doesn't say the move's going to be done and made here by the 4 o'clock time frame. Could take place overnight, and then you wouldn't be able to unload it here. But it does look like the NASDAQ futures here now, which had been the only one that had not broken out of its consolidation range, now looks like that's what it is trying to do out here. That says it's got a price projection of about 29.71. That's another 11 points or so up inside the NQ out there. And that's just how you put it together. In my opinion, that's how you put things together in the marketplace and taking a look at it. Let's go take a look at some of these other stocks here that are moving and grooving. We've got some big ones to the downside here. One of them is Fusion IO. FIO is the ticker symbol, and it is absolutely confused here this morning. I believe this is moving down beyond its low, so I don't think anyone inside Fusion IO is actually in a profit position out here. But let's go take a look at it. I thought I might have had it on my screen. No, I do not, but we're going to go ahead and put it up. FIO is a ticker symbol. Let's go see what she or he is doing. Yikes. Holy schmikeys. This one here creating another island. Well, it's created an island because it's really not anywhere near any highs. We won't call it an island reversal top, but it's bearish no matter how you look at it. Take a look at the volume on this thing. Volume is coming out of this left and right. Only been trading for, 41 minutes? Is that possible? No, an hour and 11 minutes. I should just have to work on my math out here. In an hour and 11 minutes or so, 20 million shares to the downside. Biggest volume day this thing has had on it. What the heck did they say? Did they say they were going out of business or something? Fusion IO, they named Shane Robinson as chairman and president. Welcome to your first day on the job, Shane. Man, oh man, there's not a vote of confidence behind that one, that's for sure. That's on Fusion IO. I'm not saying that's why the stock is moving lower, but holy cow, this thing has got major problems in this, and it's not anything I would go anywhere near. This thing IPO'd back in June of 2011. During that trading session, went from $22.41 to $27, but got up as high as $41 out here. It does that November 16, 2011, and has been a roller coaster to the downside, and I don't see any stopping in place here. So what a nasty, horrible-looking stock chart out here. That is Fusion IO. Let's go take a look at maybe something that's a little bit more positive out here. Let's see. We took a look at DaVita, Whole Foods. How about, let me see if this is an earnings thing. ICU Medical. So let's go take a look at that. That's up 15% this morning, up $9 and change. Its ticker symbol, excuse me, ICUI, ICU2. Look at that. Well, look at that wide-ranging bar inside this. And I don't see what is behind the move out here. Doesn't really matter, but this is wide-ranging price with wide price spread behind it. Let's go see what the heck this thing is taking out. God, it almost looks like it were a buyout, but I don't see that in my anywhere in my system. So this thing here, holy cow! Look at the volume behind this. Put this one on your watch list if this thing were to come back to its breakout area. That's a wide-ranging bar for sure. Volume so far today, 492,000. Breakout here, 61.01 is the low. It's traded up as high as 71.29. So these guys must be curing cancer or something else out here, but I just don't see it in my news feed. My apology for that. Let's go see what it's taking. Let me put this on a longer-term chart out here. There we go. On the monthly, boy, this thing has really taken out everything. If we just take a look at simple A to B equals CD structure out here, just coming off the monthly chart, the low back in June of 2008, the high back in July 2009, makes a retracement down into July 31st, 2010, already beyond the 1 to 1.618 level. Next stop on this is 74.58. The minimum next stop on this looks to be 74.58. That is ICUI out there. And that is a rocket ship. I'd put that one on my list in case it ever came back into that breakout area. Let's go see what else we have here that is moving in the marketplace. We've got, let's go check on Onyx Pharmaceuticals, ONXX out here. Let's go see what this is doing. ONXX. It is up nice, trading out at 95.45 right now. Let's see what kind of volume is behind this move here. This had completed a small A to B equals CD. Goes ahead and pulls back into the rising price channel. It's a rising price channel that goes back quite a ways. And this morning, looks like this is headed towards its most recent swing point high, which is on April 23rd. That's got volume of 1.1 million shares so far today. It's done 815,000 shares. So you got volume inside this pharmaceutical entity as well. That is Onyx. Let's go take a look at some of these other stocks. Let's take a look at, let's see here. That one was a buyout. Let's take a look at the WebMD. Let's stay on the medical side. They are celebrating here this morning. WBMD. Yeah, I was spelling name. That was really smart. WBMD. That is gapping up here this morning with volume behind the move. So let's take a look at this. Looks like this may be at all new time highs out here. I believe this was an IPO. No, I take that back. It's not even near any all-time highs. WebMD moving into the gap here where this thing broke down with massive volume. Wait. Okay. January 10th, 2012, this thing moves down with 11.6 million shares. Hey, it's had a nice move here this morning, but the move so far is with 1 million shares, so nowhere near that volume inside WebMD out here. If anything, it's going to. Now, look, this can go close the gap, which would take you up into the January 9th low at about 36.51. It's trading at $30 here right now, but it does not have the volume. This is really kind of a nasty-looking stock chart. It did have a nice little break here on February 22nd, 222.13. It does it with 4 million shares. Certainly that's a sign of strength here off of the bottom. But even that was going into where it had broken down with 5.9 million shares. So looks like WebMD needs to go to the shrink because this looks like a psycho type of a stock out here. So you see these kind of patterns. It's actually more of a sign of, you might as well just simply stay away from it. So someone says up for sale. So that must have been on the ICUI. Thank you for that, Terry, in the den out here. It's certainly not on sale from a sales price standpoint, but they're certainly bidding that up. Let's take a look at a couple other stocks here, moving to the downside. How about the big one? That is Axial Corp. Let's take a look at that. That ticker symbol is AXLL out there. That is down really large. Let me put it up on the screen here, AXLL. So this thing here gapping down with volume. Let's go see what this is moving into. Axial Corp. Let's see what they actually do. What does Axial Corp actually do? They're down $9 here right now, and they reported revenues of $1.1 billion versus $859 million a year ago, so not bad there. They did have a net loss of $3.5 million versus $35 million profit. So they obviously have been on the boondoggle out there. They've had no problem spending money. They operate integrated chemical and building products company in North America and Asia. They manufacture chlor-alkali and derivatives, chlor stuff. I can't even pronounce some of these things here. Dichloride, I can pronounce that. Vinyl chloride. So they're in the chloride business here. But speaking of chloride, they're being taken to the cleaners. Let's take a look at the patterns here. We're looking at the daily chart. We never like to see it close below a hammer candle. And the hammer candle sticks out at us. That hammer candle did what it was supposed to do. This was a breakout area with some nice volume back here on January 28th. We'll make that a black line going across the screen here. So as we take a look at this, nice volume, wide price spread, 15.7 million shares, January 28th, moves a bit higher. Those that waited for it to come back to test that breakout area, it tested with 2.4 million shares and gave you a hammer candle. Told you the bulls were hanging out right there at that breakout session. Makes a move higher. Does that on March the 20th. And now what happened here is you broke that hammer on May Day, on May 1st out here. This wants lower price. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Everything slightly green or pretty green out here, with the exception of the Russell 2000. Just give that a few minutes, and she'll tag along too. It's going to be the NASDAQ here, the NDX 100. That lifts the tide higher today. Right now, the Dow is up 2 points. The S&P is up 3. The composite is up 12. The Russell down 30 cents out there. Let's go back and let's take a look at Axial Corp. AXLL out here, off 17%. More important than that, it's got lower price. It has now taken out the B point with volume. A to B, The 8-point on here is the high from March 20th. That level, 64.96, makes a move down to the breakout area. So it was its second test, I should say, of that breakout area. It does it on April the 15th. Now, that was 3.1 million shares going against the hammer that had 2.5 million shares. Yikes, you don't like to see that. But going against the breakout that had 15 million shares. Okay, the bulls ought to be able to hold that. That's what they did. Then what happens? Makes a retracement. What kind of retracement? A shallow retracement. A little over a 0.382 retracement. That is never good. Then it continues its move down and does it with volume picking up on the trading session here of May 1st. You've got now 2.4 million shares. Now, the 2.4 million shares, it breached the hammer low. Bad sign out there. Now, it breached that hammer low. It also closed the support of the window. That gap up was January 25th. Once it got below and it closed below 50.35, really, that area no longer became a support area. You can just kind of throw it off to the side out there. What it did do, though, is it broke the B point, which was April 15th, on lighter volume. What's it do? Breaks back up inside that area, and now today, boom. 4.4 million shares already going against the B point with 3.1 million shares. 1-to-1 takes you to 44.23. Is that where this is going to stop? Heck no. This is going to run down to 40.42. You know, they got some good volume out here. You've got the bulls that are going to try to hold this thing in place, but this is starting to show that the institutional sellers are trying to take control of Axial, AXLL out here, and more likely than not, this thing's going to make at least a run to 40.50, maybe 35.63, and let's face it, if it can get all the way down there, this thing will come back to its original breakout area, which takes you back to July 19th of 2012 out there. So things not looking good for Axial. If we go take a look at, how about Zillow? Let's see, Zillow's down 8% out here. Let's go see what kind of volume is behind the move. Z is the ticker symbol. Again, not to be at all confused with our Z in the den. Z in the den is not having a downdraft here at all, but Zillow is. Zillow moving down today with some volume. You've got 1.4 million shares here. Where is Zillow likely to head to? Well, looks like Zillow also has a hammer candle, so the area of support. Now, it doesn't really qualify as a hammer, that trend, because you see this trend here, really more of an uptrend coming off of the April 5th area, so you can't necessarily treat this one like a hammer. Looks like a hammer, smells like a hammer, but that really, if that gives way, that's not my, if you break the hammer low, look out below kind of a thing. It is a swing point. That swing point has 963,000 shares, and it's into it already with 1.4 million shares. So the low of that should be tested. If we take a look at Zillow, Zillow ought to run down into the last time where it broke out. It did have this little shooting star. That shooting star was broken. The high of that is $47.85. What it also has up there as well is not really a whole lot. So it looks to me like Zillow, if it's going to pull back, should pull back into about the 47.85 area, and that is letter ticker symbol Z. Folks, if you're off to start your Tuesday, have a terrific Tuesday. Otherwise, we got Basil Chapman to follow, Larry Pesavento after. That's Wednesday, I'm sorry. Larry Pesavento, Daryl Martin from 1 to 2, David White 2 to 3, and don't forget that workshop tonight, folks, 6:30 to 7:30. Go sign up on the homepage at TFNN.com and take advantage of those Tiger dollars. Have a great Wednesday, folks. I look forward to seeing you in the morning. Take care.